Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, first day of October 2015, and this is the daily report for gold and silver. We have gold in essence unchanged on the day. You can see the current print on the board, 1114.19, putting it down about 30 to 50 cents lower on the day, just a fraction of a percent of a drawdown. And that, of course, is when we look at our spot gold. When we look at COMEX futures, current print is 1113.5, off about $1.70. Now, very tight range also today, roughly a $8 spread with a low of 1110 and a high of 1118. When we look at silver, silver is up ever so slightly, up roughly 3 cents on the day, $14.52, $14.51 in that area. And as I said, putting it up anywhere between 2 and 5 cents on the day. When we look at our daily chart, we can see how tight that range is. It had traded to a high, as you can see up here, of about 1470. We are just a couple of ticks to the upside, but trading near the low of the day. However, when we take into account the tremendous sell-off we've seen this week, as represented on our weekly chart, this one candle here, there's absolutely no doubt this market has given back much of the gains that we saw a couple of weeks ago, as it did attempt to tackle the $15 price point, unable to hold that. This, of course, being last week, where you had a very narrow range between your open and close, although closing slightly lower, but closing above $15 per ounce. That mark is right here, of course. And then this week, tremendous backslide in which we saw this market really break heavily below $15 per ounce. And once again, look at those mid $14 per ounce levels. So traders, the first chart I really want to look at today is going to be a daily chart. We have been using this to plot different levels of support and resistance. We talked about the fact that the lows that we have seen over the recent 2 trading days have come right to a pretty critical level of support. The level of support that I'm talking about is a band that begins roughly at 1109 up to about 1112 or 1111. Now, I have added another fib retracement. Of course, the first fib retracement that we're looking at is from this entire $100 rally, 1071 to 1171. The second fib retracement that we have added to this starts at the bottom of this particular market at 1100, meaning after it rallied, it hit these highs at 1171 and came down. We did get a scenario where we did have, in fact, a higher low, because that was obviously this 1100 above these lows here that are sitting at about 1071. And now we can say with some certainty, of course, that we have now seen this market trade to a lower high. So we've had a higher low and a lower high, which means that in essence, our range is at this point compressing. It is getting much tighter. Now, when we look at these different areas, we identified a couple of harmonics in the market. One of those harmonics is at 1121, and that can be represented right in here. You have a 61% retracement and a 50% retracement of these 2 different time cycles and price range areas. The second harmonics that we can definitely identify is these current lows that we are seeing at roughly 1109 to 1112. And that's based upon a 78% retracement from the shorter of the 2 fib retracements, as well as one that sits here roughly at 1109. So the real question we really need to postulate is whether or not this key level, this area that we have identified as having harmonics, meaning we've got a 78% retracement and a 50% retracement, both lining up at this particular price point, call it 1110, roughly in that area, whether or not this area can actually hold. So in terms of a short-term look at the market, we want to see if this area is going to hold and this market's going to move up from here, or if we're going to see a continuation of the dramatic draft and downside that we have seen in this market. Now, in terms of having some sort of sentiment which would let us believe that we could be looking at support that might hold, the only evidence that we have is that over the last 2 days, this particular area, these lows have been tested, and at least for now they have held. We have one more trading day, of course, in the week. This is the first day of the month, and this is the first day of the last quarter of 2015. And traders, the reason that I believe this area is so critical is because obviously if we break through this particular price point at, call it 1110, we have nowhere to go but to retest 1100. And then if 1100 is tested, we have nowhere to go but to test these most recent lows. And that, to me, is the one thing that we want to be on guard for, because if we do test and break these lows, and it's a big if at this point because we are still quite a ways away in terms of price point, but if in fact we see this market come and test this particular area, meaning 1071, the next real strong level of support doesn't come in till about 1100, or a 1092 is broken. It doesn't really come in till about $1,000 per ounce. And to illustrate that, we really want to pull up our monthly chart that has our long-term studies. And once we do that, we can see absolutely how critical this current area is, especially, let's go ahead and compress this chart just a little bit, but especially the area at around 1092. Realize, traders, 1092 is an absolute line in the sand because in essence it accounts for a fib retracement from this market beginning of the rally. There's been a couple of legs in the rally, and the legs that I look at are the market moving from about 300 to about 1,000. Then from 1,000 it retraces to roughly $700 per ounce before going into the second rally leg of this marketplace, taking it to these historical tops. If in fact we test 1092 and breach 1092, my sense is that the only real next level on a technical basis of support really doesn't come in till 1,000, and it is based upon this top right here. So traders, we are neutral in the market right now. I think that the bias is to the downside. The real question is whether or not we can find any kind of support at 1110 in that area. As I said, if that is breached, we will test 1100, and below 1100 is at 1092. That 1092, if in fact that gets breached, there's nowhere for this market to go but $1,000 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.